Hello, everybody. Welcome to the technical analysis webinar. My name is Troy. I'm a senior account manager with AvaTrade. I'll be presenting today. As we get started, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing the screen all right. All right, I've got enough responses. Thank you. It looks like we're up and running just fine. If anyone has any issues as we go along, just let me know. Quite a bit happening fundamentally, driving some great technical movements on the chart, on the charts, I should say. And so we'll take a look at the live movements here in just a moment. As we get started, keep in mind, as always, no one trade is guaranteed to bring you profits. There's risk with most any investment in life, and the same is true with Forex trading, spread betting, CFD trading, etc. So you should always think about your risk management plan, manage things in a way that makes sense for you, whether that's using stop loss settings on your trades or setting up hedge positions, pending orders to back up your initial moves. And actually, we have a unique tool on our self-developed mobile app, the AvaGo mobile app. We have a nice tool on that app for managing risk as well called AvaProtect. And so if you haven't checked out our mobile app, I'll show you where to find it in just a little bit. And the AvaProtect feature is actually very nice for managing risk in many situations on gold, silver, and FX pairings is what it's available on right now, that feature. So something to consider using. You can find our full risk disclosure statement on our website on avatrade.com. And as we go along, keep in mind what we're covering is not meant to be financial advisement, but is coming from an educational perspective to hopefully improve upon your P&L as you go along. Now, keep in mind what technical analysis is. It's basically looking at the charts, looking back at the historical movements on the charts, and trying to find repetitive patterns, trying to find a bit of predictability in the movements so that maybe at certain price levels, at certain entry points and exit points, you might improve upon your chances of profiting and decrease the chances then obviously of an unsuccessful trade, hopefully. Now, there are different ways of doing technical analysis. We've used both in the webinars. We tend to lean more on manual methods of technical analysis because I think it generates a better understanding in your mind of what actually is happening. If you draw your own support lines, resistance levels, trend lines, etc., in order to put those on manually, you have to understand why you're putting them there, and then that really helps you understand what you're doing with your trade. The other way to do technical analysis is with indicators. I think they're great for supportive mechanisms. We've used various indicators in past webinars. I tend to like the Fibonacci retracement tool because it mimics price levels that many times you see in your mind anyways, and then it can help solidify certain price levels that maybe you believe in. And indicators in general, I think, are a good tool that way, whether you're using an RSI, stochastic indicator, Bollinger Bands, or any of the hundreds of indicators that are available out there. Relying on them by themselves, it's not really a developed trading strategy, but using them as part of your tool within a larger strategy certainly makes some sense. Now, as we go along, keep in mind, you can ask questions at any time. You can interrupt with suggestions, give input. It really helps the conversation and helps bring more information to light for everybody attending, because certainly I don't think of everything, and there are things happening that maybe I don't know, and it's great to have some communication back and forth and some input. And you can suggest assets as well to take a look at as we go along. We can't get to everything, but I do my best to hit everything people are hoping to see. And so let's take a quick look at the fundamentals before we go on my demo account to look at the live charts for the technical analysis. Let's look at what's happening in the news. And so quickly I can see US futures lower. Yeah, we see that, right? S&P 500 futures, NASDAQ futures in the red. They've been in the red pretty much most of the day. And so that shows maybe some negative momentum as the US market is going to open here in just under an hour and a half. And so that's something to keep in mind. Then we take a look and we say, okay, what about volatility? What's happening with the what we could refer to as the fear index? And we see that's up over 3%, over 3.25%. The VIX volatility index, sometimes referred to as the fear index, is up nearly 3.5%. And so that shows fear on the markets, and that is confirmed by the futures dropping into the red. And so this headline makes sense. US futures lower. And if we look at some of the other headlines, IEA, that's the energy agency, warning about oil demand recovery being at risk because of the virus resurgence, the virus breaking out more and more in areas, really strong in areas in the US and other areas around the world that could maybe hurt demand for oil, is the fear here with this headline and this article. And so that's weighing on oil prices right now. So we're starting to feel why there's fear on the market. And really it's related to the virus outbreak maybe worsening in some key areas around the world. And we take a look then at some economic announcements. Hey, they were good. Some French industrial numbers came in better than expected. Some numbers out of China, new loans up. That's a sign of the economy waking up when there's more loans. People, businesses and entities taking more loans. That's a sign that, hey, things maybe are starting to open up with the economy. So these numbers were actually good. Italian industrial production better than expected, etc. Brazil had some negative numbers here, but overall it was a positive day on economic numbers. And so you say, well, where's the fear coming from? And you start to realize these numbers have looked really good as economies open back up, because it's an easy growth of an economy when it was artificially shut down because of the virus. Now they open back up. As bad as the numbers looked when everything was shut down with decreases in production, now we're seeing all that positive increase as everything opens back up. So it's not what I would call real growth, right? Just like when the numbers were so bad, when the economies were quarantining, it wasn't real economic decline. It was artificial. It was by choice to shut everything down. And now it's by choice to open everything back up. So that's why these types of hugely positive numbers aren't necessarily causing a lot of positivity on the market all the time. Although they have, the past weeks, created some positive sentiment. But now with the fear that this type of thing could be reversed, that economies are thinking about quarantining again with large outbreaks occurring, that's kind of reversing things a bit in the investor mindset. And so that's something to keep in mind. Now, someone typed a question. Just give me a second to read it. Aruna, you're talking about you feel like there could be a big crash ahead. Maybe some people overbought on stocks and things like that. You can always hedge yourself. As long as your margin level percentage is above 100%, you could fully hedge any open positions if you don't want to close them off. And by hedge, I mean, let's say, I don't know, I bought Apple stock 100 shares, and now I'm worried that it might drop. I could always sell 100 shares without it. There's no margin cost to that. As long as you're not negative free margin, you can fully hedge, and you don't need more funds to go to margin. And so as long as you're not negative free margin, you can fully hedge. Then it doesn't matter which way it goes. You're breaking even other than overnight interest. And then once everything calms down and you feel better about things, you can unhedge at a spot that makes sense to you. It's like putting a pause button on those trades without having to close them off. Okay, so it's something to consider as well. Obviously, if it was the example I used, Apple stock, you can't place trades until the market opens. So if it's going to gap down at open, then there's nothing you could do about that. But once it opens, then you could make some moves. Or if it's something traded on the futures, then everything else, in that regard on the futures is tradable now. Now, we see there are some announcements coming later today, in about 20 minutes, actually, out of the US and Canada, and certainly we could see more green numbers like this. There's no reason why you wouldn't expect that maybe some of these numbers could be positive. because again, the economies have been opening back up in Canada, the US, and around the world. And so these numbers, economic announcements out of the US and Canada, they could be positive, but still the market could drop. And why? Because of the fear about the virus spread. Okay, so keep that in mind. Now, investing.com does this, each day. Top 5 things to know in the market. We know Chinese market's easing off, and they talk about why. Well, the numbers were just good out of China, so why? Part of it is because of the potential virus outbreak again, and part of it is tension between U.S. and China. U.S. maybe putting some sanctions on China because of Hong Kong, the situation that's going on there, and also helping Taiwan, which China considers Taiwan part of China, Taiwan doesn't, helping Taiwan maybe have more air defense systems. And so China's not going to like that either. So any tension between US and China also can add to the fear on the markets, the volatility on the markets. We talked about this. We didn't specifically mention there was a new record high new cases in the US, 63,000. That's adding to the fear. Stocks set to open lower. We saw that. In a nutshell, you can see what's creating the sentiment push each day by just looking at this summary each day. Pretty simple. And so now let's take a look, and we see the volatility just jumped up to 4% now, increase in the fear index here. So the fear is starting to ramp up, it looks like. And US indices, the futures are dropping, and probably when the US market opens, there could be larger momentum as the US market opens in an hour and 20 minutes. And in about 20 minutes, we also have some announcements out of the US and Canada. So we really could get some technical movements. Let's get on the charts and take a look what's happening. Oh, I promised I would show you AvaTrade Go. So trading platforms, if you go to our website, like you're seeing here with your mobile device, with your phone, point at trading platforms, go to AvaTrade Go, download it from your app store, Google Play or the Apple App Store, and you'll see protection feature, Ava Protect. It has a gold shield that shows if it's available on the particular asset you're looking at. You can set it up in the order window. You can have coverage for a certain length of time, 1 day, 2 days, 3 days, 1 hour, 6 hours for a small premium cost, and any losses are covered during that time period. Once the coverage ends, if you have a negative floating, the protection adds it to your account and the trade keeps running. And you can manage it then with a stop loss or something different at that point. So it's a nice tool. You should check it out. The take profit stop loss, when you program them, calculate your exposure and potential profit in your account currency for you. Calculates everything for you before you ever place the trade. Before you buy or sell, you can know your exact exposures and potential profits to the marks you're putting. You can have protection. You can set all of this up, know how much goes to margin even. It tells you as you're setting up the trade size. You can be fully informed before you place the trade, which is an important part of a risk management plan, is to understand your risks and your exposures before you place the trade, okay, and the margin requirements. Okay, so let's go to the charts. I've set something up here that looks interesting. What we've noticed is as fear hits the market, the US dollar has been strengthening of late. It's not 100% relationship, but we've seen it a lot. The US dollar as a basket against other currencies has been strengthening with fear. Fear, we just saw it intensify in the last 10 minutes while I was talking. Went from 3.4% to 4% up on the volatility / fear index. So, and look what happened while I was talking. The US dollar index went up further. Okay, these are 1 hour candles. As the US dollar goes up, what we've noticed is even though fear is rising, gold a lot of times has been dropping as the volatility index goes up. And you wonder why. And think about it, what's gold paired against? Much of the time, most traders are pairing gold against what currency? When it just says gold on the chart, what's it paired against? The US dollar. So what happens if the US dollar is strengthening as it is right now? What could likely happen to gold? If people are not rushing to gold, but they're rushing to the US dollar. So there's been kind of a backwards relationship here ever since the pandemic, where US dollar has become a stronger safe haven than gold. It's not always that way. Don't get me wrong. There are many times where the dollar might strengthen, but gold can still go up. That can happen. Gold might be strengthening more than the dollar is strengthening. That can happen. But lately, I mean, look earlier today. Look at this drop here. The US dollar index dropped for 4 hours earlier today. What did gold do? It went up for 4 hours. You see that? Exact opposite relationship. Down 4 hours, gold went up for 4 hours. Now, the USD went up the last 2 hours. What's gold maybe going to do? Maybe it's going to trace down. And you know, if the US dollar index is becoming a leading indicator for gold, if it meaning a leading indicator is something that happens before the other thing, if the US dollar is moving before gold, then maybe it gives you an idea of what direction gold is about to move, right? There's no guarantee. But if we see US dollar strengthening, you think that'll pull gold down, then you put your resistance level here. Stop loss could be right above the resistance level. If you're right that the US dollar should pull gold down, then you don't have to risk much. It shouldn't break this resistance here, this high point. You could take a market sell on gold, right? Where is gold? And by the way, any trades I simulate here, it's not me telling you to place the trade. I'm just giving you an example. So if I sell on gold, then I could put my stop loss. I can put my stop loss just above this resistance at 1810, maybe 1810.50. Okay, that gets me clear of the resistance level. Okay, here's my stop loss above this little resistance here, so I'm not risking much at all. And where's my take profit? Maybe the first support level down here. That's a pretty major support. This was resistance, broke through the resistance and became support and support. Okay, that's a general technical strategy, is once a resistance level is broken, it acts as support after that. So here's the resistance, breakthrough of the resistance, support, bounce, support, bounce. So if this is going to come back down just before there, you might take your profit. So maybe 1798. Okay, so then I could go into my gold trade and say, okay, 1798 for a take profit. Okay, there we go. So now my potential risk is about a third of my potential profit if this pulls through. And if I'm following risk management where I'm okay risking to the stop loss, maybe that's only 1% of my account balance, or 0.5% or 2%, or whatever you're comfortable risking per move, and you've got that risk managed. So now you don't have to be nervous about it. Fundamental news you might feel is on your side. Technically speaking, that's a resistance level on the 1 hour candles. You maybe even believe that the dollar index going up might indicate to you that you think gold should drop, because here when the dollar index went down, gold went up. So if the opposite is happening, perhaps gold should come down. And what you're looking at here is a strategy, right? I have a checklist. I'm looking at relationship between two assets. I'm looking at the fundamental news, and I'm doing my technical analysis to do proper risk management and entry and exit points. Okay? When you operate like this robotically, you don't have to be nervous about the move. There's no guarantee this move would win. But certainly maybe the fundamental news and my technical entry points are on my side. Maybe I should win more than I lose if I follow this type of strategy, and that's what it's all about. In trading, it's about potential. It's not about trying to be right every time. Okay? You can take a look at this Boeing move that the last webinar we did. I set up a pending order. We looked at some stocks. And why did we say Boeing might drop? Why did we set up a pending order? We found a support level on Boeing, and we set up a pending sell stop and said, hey, if it breaks the support, it looks like Boeing could drop through a gap that we saw that existed on the chart. Why were we preparing for maybe Boeing to break the support level? And if it did, that it might plunge, which it did. This moves up over 1,000, right? Why were we anticipating that Boeing might drop? Exactly what we're looking at now, right? We were looking at the technical entry point below a support level that Boeing had been testing, and we said, look, there's a virus outbreak getting worse all around the world again. And we said there's a potential for fear to come around, even though there was high momentum at that time. And so we set up the sell stop, and it took a couple days, but it opened. It was a simple sell stop pending order based on potential for fear. And so technical analysis isn't just about trading on the entry point that you see right now, like maybe I'm simulating here on gold, but it's also about what you think could happen, which was the Boeing move. Let me pull up Boeing and we'll take a look at it, George. So let me pull up Boeing and let's see. Oh, I think I have my Boeing up at the top. No, I don't. Yes, I do. Here it is. No, Tesla, Facebook, Google, Apple. Where's my Boeing? I guess it's down here. Let's keep looking. Here it is. Okay, let me pull it up towards the top. I like to have stuff that I'm more interested in dragged up to the top with my other stocks. There they are. Okay, so let's then put on Boeing. I'll expand that chart. And okay, so this is what we were looking at last week. So you see, this was a support level. Let me draw this support level. Or not last week, earlier this week, I should say, not last week. So we saw the gap up, right? We saw the gap up last week at the open of the market, okay? And so then what we were looking at is this movement sideways, and we said there's a support level here. And we set up the entry point down here on a sell stop, and at that time, Boeing was up here. And we said, you know what? There's talk about virus outbreak getting worse. Maybe you put a sell stop down, and this could hurt. Why did we choose Boeing? Because airlines are hurt when quarantines kick in, when there's fear about traveling from state to state and country to country. So, and it worked out. It worked out nice. Now, what do you think might happen at open today to Boeing? There's more fear on the market. What might happen? Yeah, it could drop more. Now, unfortunately, the way your take profit works, if let's say the market opens and Boeing gaps and opens way down here, well, I only get my profit to my take profit mark here. Okay, if it gaps past your take profit, you don't get the price it opens at, you get the take profit that you had programmed. So, but still, it's still nice if it fills. And when I say gap, here's the gap. You see the space here? That's a technical strategy to trade the gap. So that's exactly what this move was. It was a combination of knowing the fundamentals, that there was fear rising about more outbreak. So putting your sell stop below the support level in case fear made it break. And then also knowing that this is a smart entry point because it's the top of a gap. And if it enters the gap, many times you refill the whole gap. And that's exactly what it's almost done. It's darn near filled that whole gap, just a little further to go. Okay, so very interesting move. And you know, Disney's maybe one that is due to potentially drop. We also set up a sell stop on Disney. Well, it didn't drop, so we didn't lose on it. It just didn't drop. Why do you think Disney might have some pressure to drop right now? What state in the US is having the largest outbreaks? And what does that have to do with Disney? Yeah, Florida, right? And George, Florida is where Disney is located, right? So the major studios. There's you know, Disney World and Disneyland. The bigger one is in Florida, okay? And so that could be some fear with Disney. So if we look at Disney, let me find Disney. Again, I'm gonna have to scroll down. Here it is. Disney's up to a resistance level. You see here. Okay. Resistance, resistance, resistance. Now, unfortunately, you can't trade on it right now. If you think Disney should drop right now and you want to trade down before the market opens, you can. It's not traded on the futures. Probably if there really is fear about Disney, you'll see it gap down. It might open down here. It might gap. Then you can play the movement after that, okay? If Disney happens to gap down and then pull back up, this resistance level you might trust, okay? So if you can get an entry point somewhere near this resistance, if you feel the large outbreaks that are occurring in Florida are going to weigh on the value of Disney stock, then you could look, technically speaking, for an entry point near this resistance. If it hesitates before dropping, if it's going to drop, right? There's no guarantee it'll drop. But if you feel it will and it's near the resistance, that's something you could play off of, okay? If there's a gap, as long as it doesn't re-enter the gap, if it starts to downtrend, the strategy would be to go in the direction of that gap, okay? If it gaps and it jumps back into the gap, the strategy is to trade the gap to fill itself before it drops further, okay? Those are a couple strategies you could utilize. I expect you'll probably see a gap at open on a number of US assets, okay? And then you just got to be ready to play the movement as that occurs, okay? All right, let's take a look then at some other assets. Maybe some indices. S&P 500 was trying to climb. Boy, I wish we would have started the webinar earlier, because as this was climbing on the 1 hour candles, I really felt like this resistance level would hold, okay? This was support, 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 breakthrough candle, took a lot of momentum to get below this support level. Once it got through, it came back up, back below. It felt like it wasn't going to break this resistance level, and down it went, okay? Because of the fear on the markets. It makes sense. US dollar strengthening, S&P 500 is paired against the US dollar. When there's fear, people tend to leave the equities, to leave the indices and go towards safe haven. So trusting the resistance level can make sense in this circumstance on the S&P 500. Let's maybe look at some other indices that maybe have a better entry still. There we are. So the DAX is just, dropping off of a resistance here. If you want to jump on a momentum move and you say, okay, I'm going to sell on DAX, and I'll put my stop loss above this high point here. As US numbers are coming in 3 minutes, maybe that could cause a bounce back up. So you want to manage your risk accordingly, or maybe you wait till the US numbers come out, see if they're positive. Maybe that causes a temporary climb in some of these indices, and then in the bigger picture, if you think they should drop, you get in. That's up to each individual trader. But if I'm managing my risk, stop loss I might put above this resistance and this second peak right here. So maybe 625. So I could come here, DAX 12,625. And obviously you could pick a spot for your take profit as well. First major support level I see somewhere right down around here. Okay, support, 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 support over here. So 12,430 might be a spot if you're scalping that you might take your first profit. 12,000, what did I say? Let me take a look. 12,430. Okay, so now we've got, let me move this red line out of the way. There, now you can see my stop loss or my take profit. My price line was right on that spot. So there's my take profit, which is about what, double what I'm risking, or a little bit more than what I'm risking. And so in that case, I'm being lenient on my stop loss. I'm letting a nice distance so I don't get stopped out if it just tests this high point again. And almost a 50-50 setup, a 1-to-1 setup, I should say, ratio between risk and potential reward, okay? And so it's just trying to see if you see momentum, looking for technical entry points, going with the fundamental news that makes sense to you, that sort of thing. Now, another way to handle this sort of thing would be you might say, I don't want to enter there. I'd rather wait and put a pending order here. Put a pending order at the resistance. If it bounces back up, then sell. And that's okay too. You could put a by the way, if you were going to do that, if you were going to sell, if this came back up to this point here, what kind of pending order is that? Not a sell stop. Sell stop sells from a lower point. Sell limit, correct. Sell limit is selling from a higher point than it is now. And it makes sense that this might push up as the US numbers are coming in, right? Let's take a look at those numbers, by the way. Hey, the numbers were not better than expected. You see here, that's going to add to the fear on the markets today. Look at those numbers. US, every single number was worse than expected. Okay, worse than expected. And so let's see the Canadian numbers. They should have come in as well. Let me refresh. They're not showing yet, but they were supposed to report at the same time. Those are not good news numbers out of the US. So the volatility is up still over 3%. We may see a return to that 4% level or higher on the volatility index. We'll see. Okay. About one more hour and the US market opens, and we'll see what happens. A lot of times what you see is right before the market opens, the opposite movement that what is actually going to happen when the market opens. So since there's building fear, we just had some bad numbers come in out of the US, you'd think, okay, market should drop. It's not unheard of that the market might pull up some, and then when the US market opens, boom, the other direction. It happens a lot, okay? Again, I know I keep talking about fear and market dropping. There's no guarantee that'll happen, right? But you can prepare for a large potential profit in case there's momentum and that happens, right? So as I said, it's not surprising me that in the short term, this might come up here. A sell limit from up here could be a nice entry point. But with patience and your stop loss up high enough, you don't have to wait for that perfect mark. You can take your move in a less than perfect location, and still it can be a solid type of move if you're getting in now instead of waiting for a better entry point. You just have to take a little smaller trade size to have your stop loss further away with the same level of risk in terms of overall risk on the move. You just have to be willing to lower the trade size, go after a smaller potential profit in order to enter at a less perfect entry point and still not risk any more than you would have. Okay. All right. So let's take a look maybe at some other assets. What about Australian JPY? Okay. So Australian JPY, actually someone mentioned copper. So we'll take a look at copper in a moment. What we're looking at here, if we look at 4-hour candles, is copper's had quite a drop. We see this drop off here. Okay. When there's fear in the markets, why does copper drop down? Copper is used largely in industry, right? You know, copper wiring, all kinds of uses for copper when economies are doing well. So if economies are doing bad, or I'm sorry, yeah, we're looking at the Australian JPY. So, but going back to copper, why might we expect copper to drop if there's fear on the markets? And so it's because copper is used largely in industry. Now, same thing here. Why would we expect Australian JPY to drop when there's fear in the markets? Why do we expect the Australian to drop when there's fear in the markets? The yen is a safe haven, correct? The yen is a safe haven. And what about Australia? What's their number one exports? To China is their number one buyer. Coal, iron ore, okay, minings, and copper. And so if there's fear on the markets and there's fear that economies are not going to do so good right now because of virus outbreak, right? And that fear makes people think, well, you know, there might be less copper used, there might be less coal bought, there might be less iron ore used, then that hurts the value of what people see the Australian dollar as, because those are their large exports, right? And so it's good to pair something like the Australian dollar against the yen, because the yen is a safe haven. When the Australian weakens, usually it's because of fear on the markets, and that's exactly when the yen tends to strengthen. So it makes it a nice price action with this pairing. The Australian JPY specifically has very good price action, better so than Australia, Euro Australia, because the euro is not a safe haven. So this is a very good pairing to look at when there's fear in the markets. And so this shows you that there's fear. Now in the last 15 minutes, there's been a little bounce. That's why we saw some of the other assets starting to bounce up a little bit. That's why the DAX is slightly in the negative on this simulated trade. But once the US market opens, that fear could take over again. Okay, something to keep in mind. This is confirmation of fear. The Australian dollar dropping like this, that's confirmation of fear. Okay, let's look at copper, by the way. And I will find it. Here we are. Okay, let's go to like 1 hour candles. Should copper break the resistance if there's fear, or should it drop? And we see it's been trying to drop, just like we were saying. It rose up, and now look, for the past 4 hours, 5 hours, resistance down, resistance down, resistance down, resistance down, resistance trying to go down again. So if Australian JPY is any indication, it already dropped quite a bit. So this could be a move, Australian JPY, right? Again, no guarantee of profit on anything, but if I'm selling on the Australian JPY and I'm putting my stop loss above this resistance level here, okay, it could go up and test this resistance still, right? So maybe I want my stop loss above that. So let's say 2.88, 2.90, something like that. So if I put a stop loss in, I'm sorry, I'm selling on, copper, I'm sorry. 2.90, let me go back. And then we can go back to Australian JPY in a second. So if we're selling on Australian JPY, and then we're also selling on copper, okay, and I'm just leaving the same trade size on everything because this is a demo account, but you'd want to put the right trade size on your demo. So now I'm above I'm going to go 2.90 maybe on my stop loss on copper, and I'll go back to the chart on Australian JPY. Oopsie, modify. And you'd want to take the time to find a take profit mark as well. And then let's bring up the Australian JPY chart again. So we're above this resistance on the stop loss. If we go to 4 hour candles, 1 day, here's my stop loss up here. And maybe I don't need it that far away. Okay, go to the 4 hour. There's my stop loss clear of all of this resistance. And you have potential profit down to wherever you think you'd want to take profit potentially. And then Australian JPY, let's bring up that chart. And if you're selling on Australian JPY, let's go to 15 minutes. Maybe you get above this resistance level here to limit your potential loss. So 74.44 gets above all of that resistance. 74.44. Okay, so now I've got Australian JPY, stop loss above the resistance, selling. Why? Because of fear on the markets potentially. I've got my copper move also with stop loss above the current resistance. I think the entry points make sense, and the stop losses can make sense for limited risk. And then you'd want to take a look at where might you want to take profit as well, depending if you're scalping or something different. Aruna, you're saying oil is dropping, and that makes sense. Why would oil be dropping? Because there's fear on the markets, right? And keep in mind that if we're looking at entry points, you might want to find a resistance level before you'd sell on oil if you think oil should drop, right? Nobody's guaranteeing that oil should drop, but you're seeing a little bounce before the US market opens. Again, it happens a lot. It happens a lot that as a big surge is about to happen with either European market opening or US market opening, sometimes the anticipation of that actually moves assets in the opposite direction. You might think they'll move after the market opens. Okay, so we're taking a look at oil in general. Oil dropped today, right? Down, 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 a little bounce. If you believe oil should continue to drop, then you might find a level of resistance and say either this resistance level, which was an old support level right here, that you would sell from that, in which case you'd sell right now. Or you might say, no, I'll only sell if it comes up to the next resistance level up here, this high point. It's up to you, right? And by all means, if you think oil should go up, then you could trade that. One thing to keep in mind on oil, this gap on the one-day candles, we've been looking at it for weeks. There's a major resistance level here. When it hit the top of the gap, it dropped. When it hit the bottom of this gap, it went up. When it hit the top of the gap, it dropped. It tested the top of the gap again, it dropped. So right now we're between the resistance up here around 41 and the support down here around 35, 36. We're about a third of the way down into this gap. So if you're selling on oil, understand it's got a little ways to rise before it gets to that resistance level. Okay, so if you're selling on oil, then you might think about taking a trade size that allows you to stay with it until at least it would break through that resistance. Maybe don't give up on it unless it breaks that resistance level. If you're buying on oil, you might think about taking profit as it gets near this resistance on the one-day candles, because it tested it once, twice, 3 times and failed. And with all the fear on the market right now, oil might have trouble breaking that resistance, even with a 4th test of it. Okay. All right, everybody, I think that's a good spot to stop. We've looked at a lot of different assets, some ideas for future moves. There's no reason why you can't put a pending buy stop on oil up here. You could play just like I did on Boeing, which is up 1,000. You could put a buy stop on oil up here and say, listen, if US stimulus comes through, if something positive happens, oil could test this resistance and break it. What do you think would happen to oil if it breaks this resistance? Where's the next resistance level? Right about here. Okay, all the way up around 48, 49. Certainly 45 could happen, right? So at the same time, that even if you think oil should drop today and you're selling, why not back yourself up with a buy stop above this resistance in case it breaks? That's the only reason I'm up on Boeing. Why? Because I put a pending sell stop just in case. Well, why can't you put a pending buy stop above this resistance, above the top of this gap? It tried to break it 3 times. Maybe some good news passes and the US passes another $1 trillion in stimulus, which they're talking about doing soon. And that maybe that's the stimulus to drive oil through this resistance and up. So you can be ready for it. Okay. You can be ready for a buy. If it breaks with a buy stop, you could be ready for a buy limit. George, if it drops to this support level, you could be ready for a buy limit at 35.5 as you're suggesting. Okay, why not do both? You can do both. Okay, all right, everybody, thank you for joining. Good luck with your trading. I think there's going to be huge movements as the US market gets going today through the end of the day. Okay, just be careful. Maybe think about closing out trades before the weekend if they're short-term moves, because the weekend could bring huge different news and you could get big gaps with the market open on Monday, on Sunday night, Monday morning. So I think huge potential profits through the rest of the day today. And think about closing trades off before the weekend if you don't want to risk large swings in momentum over the weekend. All right, everybody. Thank you for joining. Have a good weekend. Good luck with your trading today.